Good morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 2nd September 2021. In the international market, investors are now eyeing Friday's non-farm payrolls to get a clarity on when the tapering would start. Market is expecting NFP to increase by 7.5 lakhs on jobless claims to touch 5.2% from 5.4% in July. US 10-year closed at 131, pretty much unchanged, and 30-year also unchanged at 192 on Wednesday. In the crude oil market, crude is trading at $70.98 per barrel. Short-term range for crude is 70 to 73. In the OPEC Plus meeting yesterday, the group has confirmed the plan to add 400,000 barrels per day, which is 0.4 million barrels per day in output for its members in October. OPEC Plus also confirmed that an additional 400,000 barrels per day will be added back into the production quotas each month until the entire production cut is rolled back in May 2022. This has led the fall in the crude as the supply is now confirmed and there are still concerns over COVID. In the currency market, dollar index or DXY is at 92.48. Short-term range for today for DXY is 92.33 to 92.89. A strong NFP data will bring DXY back to 93 levels. A big miss like April NFP data will force DXY near 92 levels. USD via Chinese yuan is at 646. USD INR with a high of 73.16 closed at 73.08. Support at 72.80 and resistance at 73.10 does exist. Trading idea for today for USD INR, a close of 73.08 is an early sign that 73 level is not breaking anytime soon on a closing basis, but technically support at 73.30 will come. USD INR will be range bound today. There was some buying seen at 72.92 and it was a signal that 72.92 will act as 72.90 will act as a great support. If NFP data are stronger, we may see rupee crossing 73.30 on Friday itself before the actual NFP comes. In the domestic market, markets are witnessing a small rally of 5 to 15 basis points across the maturities. Here are the main reasons. Reason number 1, Federal Chairman and RBI Governor reiterated that the central banks will be growth supportive and ultra loose monetary policies will continue for now. Number 2, this boosted sentiments in the last 2 weeks in G6 and SDL auctions and demand were firm with RBI exercising green shoe option and there were no devolvements or cancellations. Point number 3, GDP miss. Economists' expectation was 21.4% growth versus actual GDP came at 20.1. Traders are believing the normalization will take some more time to happen. 563 2026 closed at 561 versus 565 the previous trading day. There was a 4 basis point rally in the 5-year paper. FPIs are still buying it. 664 2035 closed at 675 versus 677 the previous trading day. 1st September 2021 T-bill auctions, 91-day T-bill at 328, 182-day at 342 and 364-day at 362. Analysis for T-bill auctions. Short-term liquidity is abundant and seen in T-bill auctions. All 91 to 364-day T-bills are lower by 1 to 3 basis points than the last auctions. Noteworthy action in the corporate bond markets. SBI has raised rupees 4,000 crore Basel III Tier 1 bonds at 772, which is cheapest till now for SBI Tier 1 bonds. Last time in November 2020, SBI had raised 2,500 crores at 773. Trading strategy for today, 610-2031 is now at 620. There is still some steam left and few of the market participants are anticipating 615 levels for 610 where there was a devolvement on PDs few months back to give them an exit. But we have advised our clients to be cautious and exit below 620 already, and yesterday's rally was fully capitalized. Trading range for 610-2031 is 618 to 623 for now. That's it for today. See you tomorrow with a new episode of Night Snippets.